Good morning, fellow traders. This is Joe Gruender from Investors Help here in beautiful California. We hope you're having a great day, and we have been looking for what we call a Investors Help high probability trade. So what we're going to share with you today is a trade that we're entering with calls on trade number 180301. In other words, even though it's the last day of February, we're going to call this the first trade for March 2018. And it is going long, buying calls or buying the underlying stock in Costco. What this is, it's an earnings trade in anticipation of the stock going up prior to earnings announcement. As you know, it's a very high risk staying in a position after the earnings announcement, but it's a lower risk going into a trade and getting out before the earnings. So here we are on February the 28th. This is where we're making our trade, and earnings is going to be on March the 7th. So we're going to be out on March the 6th or March the 7th prior to the earnings announcement, which is after market hours on March the 7th. Okay? Based on our analysis and probability testing, there's a probability of success of 90%. Now, this is not a projected profit of 90%, but it is a probability that the trade will end successfully. There's a 90% probability of success in the trade. What we're going to do for this trade, we're going to buy calls. And I'm not going to talk about that in this video because I want to keep it short. But we're going to buy some calls on Costco today with an expiration after earnings. We're going to go out 2 or 3 weeks, and it will be after earnings, but we will be out before the earnings. Okay? So you don't want to get stuck into this. Some people will stay in until earnings and take the gamble, and it could turn out great for them or it could turn out lousy. But we want the high probability, and that is that the stock price will go up between now and the earnings date of March the 7th. So let me just take a minute here to explain more information regarding the trading platform. We are at Thinkorswim, which is the trading platform that we use for most of our charting. And as you can see, I have 3 moving averages. The green is the 20-period moving average. The blue is the 50-period moving average. And the red is the 200-period exponential moving average. So those are the 3 key indicators that we use. The ideal setup, of course, is when the 3 moving averages are very close together. And we have a strategy that we use to pick out, like this place here, where the moving average are very compressed and close together. And as you can see here, it had a great run up from that point. We're using a different strategy here, which is our earnings play strategy. And one of the things that we consider in doing this